So how can one tiny mistake, a single misplaced finger on a keyboard, unleash hundreds of millions of dollars in financial chaos? It sounds like something out of a movie, right? But in the super high-speed world of global finance, it's a terrifying and very real possibility. Today we're going to unpack the fat finger error, the simple typo that can have billion-dollar consequences.
Let's just start with a wild thought. Can a single typo actually make someone a millionaire? Like overnight? Well, the answer isn't just yes. It's this crazy story of how one person's massive mistake became another person's miracle.
Okay, so to really get how this is even possible, our story starts on a trading floor in Tokyo. This is the tale of one of the most traumatic and costly typos in the history of finance.
Picture this. It's sometime in the 2010s, and a trader at a big brokerage firm is making a routine stock sale. You know, a job they've probably done thousands of times before. But this time, one small move was about to be anything but routine.
So, what exactly went wrong? Let's break down the anatomy of this mistake. The plan was super simple. Sell 610,000 shares of a stock for just 1 yen each. But the typo flipped the whole thing on its head. The trader entered an order to sell one single share for an insane 610,000 yen. The second that order hit the market, well, chaos just erupted.
You have to understand, these automated trading algorithms, they reacted in milliseconds. This wasn't just a market blip. Analysts who were there on the ground called it a financial tornado. That's how fast and how destructive the whole thing was.
And here's the kicker: the cost. Before the Tokyo Stock Exchange could even react and halt trading, the damage was done. That single keystroke cost the brokerage firm $240 million. Just gone. In a single day.
But, and this is where the story gets absolutely wild, while the brokerage was staring down a catastrophe, that same error was a miracle for some anonymous investor. It was pure, sheer luck. This person had a preset automated order to buy at that exact mistaken price. So when the financial tornado hit, their position just skyrocketed, and they made millions of dollars in a matter of minutes.
So yeah, that incredible story, it's the perfect example of what the industry calls a fat finger error. And it's not just some wild one-off thing. It's a recognized risk in our modern financial world, where human sloppiness meets lightning-fast machine speed.
The name itself is pretty descriptive, right? A fat finger error is pretty much what it sounds like. A human mistake during manual data entry. You know, you hit the wrong key, maybe add an extra zero, mix up two numbers. In most jobs, you just hit backspace. No big deal. In high-frequency trading, that little slip can make a fortune just evaporate.
And this is really the heart of the problem. Think about it. Our financial markets are running at machine speed, practically the speed of light. A human makes one tiny little mistake, but before anyone can even blink, that error gets amplified across the globe by machines. It sets off a chain reaction that's almost impossible to stop.
And you know that Tokyo incident we just talked about? It wasn't some freak accident. It was actually part of a really troubling pattern of massive errors that shows a deep vulnerability in how our markets actually work.
I mean, looking back, the warning signs were all there. Way back in 2005, a Japanese firm called Mizuho Securities had an almost identical fat finger disaster. Then, fast forward to 2012, and a company called Knight Capital faced a different kind of demon. Not a human typo, but a software glitch that nearly destroyed the entire company.
So let's just compare the root causes here for a second. The Mizuho incident, that was classic human error, just like our first story. But Knight Capital was a whole different beast. It was a software glitch. A bad update made their algorithms pump over $4 billion in wrong orders into the market, and they did it in just 45 minutes. So two different triggers, same chaotic result.
And the price tag on that Mizuho error from 2005? Get this, almost $300 million. It's just another insane reminder of how much money can be lost in the blink of an eye. Okay, so with this much money on the line, you've got to be thinking, aren't there safety nets, like an emergency brake or something? Well, yeah, there are.
They're called circuit breakers, and you can pretty much think of them as an automated safety valve for the whole market. When computer systems see wildly abnormal prices or trading activity, like, say, a single share being sold for 610,000 yen, they automatically slam the brakes on and halt all trading. This gives the humans a crucial moment to take a breath and figure out what on earth is going on.
But, and this is a huge but, here's the thing. Circuit breakers are a reaction, not a prevention. They can stop the bleeding, but only after the injury's already happened. They can't stop that first mistake from being made, which means the risk from both us humans and our software is always there, just lurking under the surface.
And all of this really brings us to the main takeaway here. It doesn't matter how advanced or automated or AI-driven our systems get, there will always be a ghost in the machine, us, the human element.
This, right here, is the ultimate lesson. In an age of algorithms and AI, it's just astonishing to realize that one human keystroke still has the power to shake the global economy. It's the ultimate reminder of our power and our capacity to screw up.
So that leaves us with one last kind of provocative question to chew on. As we keep building and relying on systems that are more and more complex and automated, have we, the creators, accidentally become the single biggest risk factor? In a world that's going to be run by AI, are we the bug in our own code?